hi to everyone. There's brokers across Canada right now, which is so awesome. This is the third training that we do with my Broker Pro, and I'm really excited because I told some of you before we hit record that we actually presented this twice last week ourselves, my husband and I, with a group of business networking group and a group of first-time homebuyers, which was accompanied with some realtors, a financial planner, a lawyer, and I think that was it. But yeah, so we kind of teamed up and it was successful, and we kind of brainstormed after some ideas to do some more virtual meetings as well. So basically I'll teach you guys the kind of the script that I use because we personally use this, and of course feel free to make it your own. And because the template's in Canva, you can obviously edit it to make it your own brand and stuff. So I do plan on doing some future sessions on how to help you create a brand as well, because then just with one click you can change the template if you did purchase it to your brand and everything, and fonts, and then just drag and drop your photos. It's really, really easy to use. If you haven't purchased the presentation, it's only like 35 bucks. There's like, I think like 28 awesome slides, as you guys are going to see today. And as I mentioned, for BRX agents, it is free. So I will share my screen. I'm going to share my whole screen, so hopefully I don't get any embarrassing text messages. And can you guys just let me know when you see my screen? Yes? Okay, perfect. Okay, because when I'm on this screen, I can't see your guys' faces, so I'm just gonna present as though I can see you. So basically, this is the presentation here. The first few are my slides for you guys, and then we'll jump into the actual presentation that you would do to your either realtor partners or to, sorry, I gotta let some people in here, or to your first-time homebuyers. So a little bit about me. Some of you know me already if you've been in the previous trainings. So I'll just cruise through this quickly, but I've been a broker since about 2018. I did a short stint at the bank as well, but I did learn a lot from that first broker I worked for, which I was actually a licensed assistant, and she did about 75 million a year. So as you can imagine, I touched a lot of files and learned a lot of stuff really quickly because of the amount of volume that she was doing. So I would say that the base of my knowledge really came from that stint. And then I did make my way over to the bank as a mortgage specialist, which is a commission-only role. And I had to kind of start my business from the ground up as well, much like you guys starting out in the broker channel, because the bank says they're going to give you leads, but if we're being honest, they don't. So I hustled for like 6-7 months and worked 8 hours a day, and like, much like what some of you, if you're new, are feeling, or if you've been through this before, you understand that it takes so much effort before you get those first files and those leads. And not only that, but by the time they close, right? So that process as a new broker, or in my case as a specialist, it takes months. It took about 7 or 8 months before I saw consistent income. And at month 6, I remember actually crying to my husband and saying that I needed like a waitressing job because I wasn't contributing to the family, but yet I was like working 8 hours a day trying to get leads. So I'm here to tell you that eventually, with some hard work, that will balance out for you, and you're part of an amazing career, and it can be very lucrative. There's lots of brokers that make pretty amazing money out there. Like, you know, think of this high vault, like the 75 million, like in the broker channel, that's close to, you know, 750,000. So she's doing well. So in 2021, my husband and I had our first child, and my husband decided he wanted to join the bank as well, because I was doing really well, and the bank was trying to get me to hire an assistant. I was doing about 45 million a year in volume. And then they didn't want to hire him. So they kind of actually forced our hand back into the broker channel, where we started Mortgage Tech, which is our company. And some of our brokers are actually on the call today, our newer brokers who have joined our company. And it was kind of a blessing in disguise. You know, I forgot how much brokers make compared to when I was at the bank. It's almost double or sometimes triple by the time you get taxed. And yeah, it was just a really good switch for us to come back into the broker channel. So I'm kind of grateful for being forced back in and never looking back. So my Broker Pro, which some of you know me as, if you're part of the marketing company, was kind of founded in this summer 2022. And basically what was going on when we started Mortgage Tech, I had to do all the branding myself. And because when you're part of the bank, I was at Bank of Montreal, you get this huge brand behind you. You don't really have to market yourself. People just automatically know who BMO is. But when Mortgage Tech, like nobody knew who that was. So I had to brand us, do a website and do all this stuff and social media and blogs and newsletters. And as most of you guys know, that's basically a full-time job. So we moved the book of volume over to my husband, and I've mainly focused on that, which is where a lot of these templates actually derive from, and the social media. So with time, brokers actually started reaching out to me. So that's when my Broker Pro was created, so that I could start helping other brokers, which, you know, this is part of that, some free training as well, because you don't have to buy the template. I just want to be able to help brokers who are entering the channel, because when I started, nobody helped me. So I'm just hoping maybe one day when you're successful that you'll do the same for some new agents who either join your team or don't. So I'll quickly go over, I kind of mentioned this before we hit record, but I did recently switch brokerages. So I was at Dominion Lending, and now I'm at BRX, or some refer to it as BRICS, which is one of the fastest growing brokerages in Canada. They're only a part of British Columbia, Alberta, and Ontario at the moment, but they are working on other provinces as well. But I've teamed up with the owner, Scott Peckford, which a lot of you are part of his I Love Mortgage Brokering Facebook group. That's the owner of this brokerage. And basically what we're doing is providing everything that I do, the templates, the social media templates, presentation templates. Well, I'll show you guys the website, but everything for free for the agents. And just, again, trying to help the new agents grow, because the failure rate for new agents is quite high, as some of you know, and we just want to help reduce that, because again, like I said, it is a very good industry. So if I switch my screen, this is kind of the intranet we just got set up for everyone. And again, lots of different things. Canva templates, which come out if you're part of my Broker Pro already. You get 9 Canva templates per week with the captions and the hashtags, which is like the write-up portion. So you don't have to think about what to say, just kind of copy and paste or edit it to your liking. All the presentations, which we have 6 now, and obviously ongoing. I'm working on some other ones because it benefits my mortgage company as well. Brochures and stationery, like things like business cards and postcards, and, you know, we're going to come out with like a Christmas thank you card, that kind of stuff. So they'll have the social media templates, the blog templates, presentations, business cards. We also came out with a realtor bundle package, which is made for you to partner with realtors in your area. With like featured listing websites, Facebook ads, that kind of stuff, to go up to them and say, hey, I have all this stuff, let's partner together and I'll give it to you for free. We have signatures, brochure templates, and lots of training, websites, all sorts of stuff. So we'll go through that at the end as well if you have any questions. But for those of you, there's lots of BRX agents on the call today as well. So if you are, there is a recording from yesterday's release of this information during the mindset call. So be sure to go through that, and we'll also just answer questions at the end. If you're not a part of BRICS, that's totally fine. We do offer these services for a really reasonable price too through my Broker Pro, which is the marketing company. So quickly about what we're going to go through. We're going to go through the about me part of it, where you're going to present about yourself, start the presentation, congrats to the first-time homebuyers who attend, about you and your team, some statistics, rent versus buy, the pre-qualification versus the pre-approval, the pre-approval process and the income and documents required, down payment and other costs associated with buying a home, what is an asset. We go through GDS, TDS, and debts, how that affects your mortgage as well. First-time homebuyer incentives and other programs. And then I ran out of room. So there's a few more slides that we're going to chat about for the actual presentation part of it, but we'll get there at the end. So this is the actual presentation here. It's just the home page. So again, hopefully you're partnering with a realtor for this. So in our case, we partnered with a realtor and they presented first. They actually introduced us, which was really nice. They gave us a shout out and bragged about us. And then we walked up and started our presentation. If you're doing it by yourself, then you can kind of just say, welcome everybody, kind of like I did at the beginning of this. Thank you everybody for coming. We really appreciate it. And then you're going to say congratulations because, home ownership is a huge step in, for everybody, anybody who ends up being able to afford a home. It's one of the biggest investments we're ever going to make. So you just want to say that congrats again. This is likely the biggest investment you're ever going to make. So educating yourself on the process and being here today, whether it's in person or a webinar, is helping you make the right step towards your first home, of course. So, you're here to help them with that. If you're new, you can get rid of this page if you'd like, or you can also talk about your brokerage. If your brokerage has been around for a while, you can add some milestones and awards. But what you want to do is definitely put in, for myself, what I would put in here is that it kind of exactly what I just told you guys about me in my transition into the broker channel, doing 45 million in my first year and the awards that I got along the way. Well, that's great. And if you don't have that yet, don't worry, you will one day. Just add things from your brokerage or just delete the slide altogether. If you're presenting with somebody, then you definitely want to go through this and show them off. So in our case, we had a slide where we were showing off the realtors, ourselves, and the financial planner, and we also had a lawyer. I didn't have the 4 here because it looked better with 3, but if you're teaming up with people, definitely give them a shout out as well, even if they did introduce you, thank the realtor for partnering, thank the lawyer for being there and giving their time to educate the homeowners on the legal side of things, which is super important and confusing for first-time home buyers, and the financial planner for giving them the advice they need to get started on, down payment or whatever that is. So here we jump into statistics. So every year, the Canadian Mortgage and Housing Corporation, which is CMHC, and when you talk to your first-time home buyers, you'll just refer to this as default insurance, but a lot of people only recognize the word CMHC. Some other buyers might know about Sagan or Canada Guarantee, but I use CMHC when I'm talking to first-time home buyers because that seems to be a more common language with them. So you can this statistic itself is from the Canadian Mortgage Housing Corporation. But when we're talking about default insurance, that's just a reminder. You can say default insurance and then say, you probably heard of this about CMHC. And they go, oh yeah, I have heard of that. So in 2021, they did their survey with, which is for all home buyers, consumers who bought in the year of 2021. And they actually found out that 53% of home buyers last year were first-time home buyers, which was an astonishing number compared to previous years. So they had a lot of reasons. And if you're not familiar with the CMHC survey that they put out, I definitely recommend you Google it because it's just awesome, talking material and knowledge for yourself. So they talked about how, first-time home buyers were scared they were going to miss out on the market, or they were renting and rent was higher than buying, so they ended up buying. So they talk about down payments and all sorts of stuff, cosigners. So it's definitely a good statistics website to check out. So you'll definitely want to chat about the 53% and how that's, showing that home buyers are, first-time home buyers are kind of taking over the market as well. One of the reasons first-time home buyers are entering the market is a lot of the time when we talk about rent versus buy. So when you're renting, some of the benefits are that you do have the flexibility to move around after your lease ends. So if you're not the type of person who's going to stay stuck in one home, then you will have that a little bit easier than buying and selling a home. The landlord, a benefit as well, the landlord maintains your house and the repair expenses. So when you're a homeowner, of course, those are things that you have to budget for and take care of and probably have, you know, like a rainy day fund. But some downfalls are that the landlord can increase the rent, you know, probably to a max of amount, or sell the property. But another big one is, let's just say they sell the property and this renter has to go and find another place to live. As we know now, rent has increased so much over the last few years that if they rented a house like 5 years ago and got booted out today because the house sold and had to find another, the increase in that rent would be crazy. So a lot of them would have to move to, you know, a smaller town, or get, you know, people to rent a room off of them, because affordability is just becoming more difficult these days. So another benefit is that it usually does require a smaller deposit, meaning, you know, maybe first and last month's rent, but nowhere near likely the amount that they would require for a down payment. But a downfall, again, is that you're paying off somebody else's mortgage and you're not building any equity. So, you know, you're making your $2,000 a month payment, but it is really like going nowhere, into thin air. And limited to simple decor. You can't really make the house your own. Like right now, I'm actually in my in-laws' house. We're on month almost 4 of renovations, where we're making our house our own, where you can't really do that when you're renting a home. So some benefits of buying: there's stability and some community. You get to know like your neighbors, you know, and you also know that you're going to be in this house for however long you decide to be there, but you're not going to get kicked out by your landlord. You're building equity with each mortgage payment, which is important. So you're paying off your mortgage and not paying off somebody else's. However, like we've discussed, you're responsible for the repairs and maintenance. So us as mortgage brokers, we're going to educate them on budgeting and saving for that as well. A down payment can be hard to save, but we're going to go through a lot of the programs and incentives to help the first-time home buyer with that. And when we talk about style, you can decorate and, you know, do whatever you want with your house and do some renovations if you'd like, and make it your own. Pre-qualified versus pre-approval, and we can say to them that this is the most common, you know, confusing terminology when it comes to getting pre-approved. Some people think it's the same thing, but we all know that it's not. So when you get pre-qualified, it's usually based on the loose information that a borrower gives you, usually over the phone, or sometimes through like a really simple application. And this would provide the client and yourself with rough numbers to work on, and maybe provide a max purchase price. But the information itself has not been verified. So you haven't received any income docs yet or down payment information. So even though you're providing a pre-qualification, it really doesn't have a whole lot of merit to stand on, because you haven't verified anything. And another key thing is we have not submitted a pre-qualification to a lender for review, and there's no interest rate holds. So we obviously all know the benefit of getting pre-approved. Obviously, it does have its limitations as well. But basically, we do most of the same things as we do when we get someone pre-qualified. But the documentation is also submitted and collected and reviewed as compared to just information verbally given, you know, or however you've collected the pre-qualification. So it almost accompanies the application that the client is doing. This provides a way more accurate purchase price than a pre-qualification as well, or a mortgage solution. Perhaps the client doesn't yet qualify for a mortgage, or they have too much debt, or they need a co-signer. So this is part of your job, is to help coach them on what that mortgage solution may be, because it may be 1 or 2 years down the line. And just a tip of advice, like, one of my very first leads I ever got, she came back to me almost 2 years later to get her first mortgage, and had followed my advice, and it was easy peasy to get done. So don't ever disregard those types of people. Always give them their time of day and do your job to provide them a mortgage solution as well. The information that you have been given has been collected, reviewed, and we have processed a credit check, which is important. A lot of first-time homebuyers will ask about the credit check because they're worried about the impact on their credit score. You can assure them that it is, you know, minimal depending on where they sit with their beacon score and credit history, but it is mandatory for us to do our job if they want to get a house. So then we have access to a certain amount of lenders who will actually softly underwrite the file, which is like kind of like a quick review, and hold interest rates, which, you know, in this recent rising rate environment is really important compared to a pre-qualification where you don't get that. So of course, we always recommend pre-approvals if we can do it. And just based on my experience, I am like a no docs, no talk kind of person. So when I do pre-qualifications with my clients, it's usually through my mobile app. I've got a Canadian mortgage app branded to my company, and that's usually what I provide the clients. And I am very clear that the numbers can change. I very rarely run numbers myself for clients if they haven't provided me any documents or an application or a credit check. Then quickly explain the pre-approval process. You know, we get them, this is my process, so feel free to change it, but we get them to complete an online application. If you're with Bricks, that's through Finmo. When I was at DLC, that's through Velocity. You should have a digital link to do this. If you're not using it, I definitely recommend you do, because, you know, we're almost in 2023 and the world is getting quite digital. So clients love it. You know, it gives them the flexibility to do it whenever they want, and you can fill in the blanks after. Then they submit you the documents that you've requested. Either your system does this automatically depending on the software you're using, or you have a list of documents you'll provide to them. We pull their credit, and then we provide them the calculations and usually options. So if the client wants multiple options, we'll put that in an email for them and also explain it to them over the phone. I'm big on emails because it's like a written confirmation that I've told you that you need to have property transfer tax saved, and it doesn't blow up in my face later. So I do like having a written form, as well as talking to them on the phone, especially a first-time homebuyer or Zoom, whatever you prefer, because they may not ask you the questions that they're afraid to ask, and kind of going over the phone may give you the opportunity to give that to them if they're shy, or maybe they just don't even know they have the question. And then we give them the pre-approval and possibly hold the rate with a lender depending on the client's application. So then we're going to go into the documents required. This is just very, very basic. Of course, this, as you guys know, will change depending on a purchase and a refi, if they're separated or whatever that looks like. So this is just very basic. And then you can elaborate on it in your presentation if you'd like, or change the slide to be more in depth. It's just, I didn't want to have 500 documents, as you guys know, usually need. So it's just more about the income type documents. So if there's salary, we just need, you know, regular pay stub, letter of employment, and then T4. I do tell people that if I collect the documents and it takes them a while to find a house, that we may need to do that because they have to be within like 30 days before we get that approval. So part-time, you know, employees, they still need that pay stub, the letter of employment, but they also need a 2-year history. Variable income would, you know, apply to those who are on commission with an employer, not self-employed. You know, seasonal workers, waitresses, people who claim their tips, that's all variable type income. So for them, we would need pay stub, letter of employment, 2 years T4, and you can even go deeper than that if you wanted to get the T1 generals and the NOAs. So all you would just do is add another bullet point for what you need and what you would want. Self-employed, we all know they require all the documents in the world plus their firstborn child. So this is just a quick list as well. And obviously we remind self-employed borrowers that this can change and that we likely will need more docs throughout the process. But we try to collect everything up front, even if the lender doesn't ask for it, so that I don't have to constantly go back to self-employed clients. Again, personal income tax returns, notice of assessment, business financials if they're incorporated, the T2125 if they're not incorporated, other documents, and then they have to have that 2-year history. Of course, we have programs outside of that, but you have to think first-time home buyers may not have 20% down. If they do, then of course we can explore those other programs, but we don't really dive into that so much in this presentation. This is the down payment cheat sheet. Some of you guys have got this because it was a freebie we sent out a while ago. If not, just send me a message and I can send it to you. It's a great social media post. So just how much do I need for a down payment? This gets often confused with first-time homebuyers and realtors, to be honest, about what's needed. People just assume if they're a first-time homebuyer that they can put 5% down on like any purchase price. But as a broker, you know that that changes when they reach a purchase price of 500K, and then it changes again when they reach a purchase price of 1 million. So the cheat sheet just quickly visualizes that, but basically the education part of it is, you know, it's 5% between 0 and 500,000 and 10% on the remainder. And then if you buy something for $1 million and above, it's 20%. So a lot of the times you'll hear the realtors go, I didn't know that. So it is a great slide to just give some more information to those who are in the room. And go from there. Of course, remind them of default insurance, but this is just roughly what they would have to save based on that purchase price, right? Some additional expenses, you know, it takes a lot of discipline for first-time homebuyers to save, you know, 25K or 50K or 75, wherever they're buying, depending on the purchase price. And they often forget that there's other expenses when it comes to buying the home and after the home. So depending on, you know, if it's a resale home or new home, they may have a home inspection. There's different types of home inspections. Like in mine, we have a general one, but we also have like termite inspections and all sorts of ones. So, you know, that can add up to $500 to $1,000 really quickly. Not necessary from the lender, but obviously encouraged to do if they're buying a resale property, or just to make them feel comfortable with the purchase they're making as well. Legal fees, which can't be tied into the mortgage, and it depends in your area. In our area, we're looking at about $1,600 to do a mortgage and a purchase. So that could vary, of course, if you're like in the GVA or GTA. So definitely have a rough estimate of what lawyers cost in your area, or hopefully there's a lawyer with you in the presentation. That would be bonus. But of course, there's that. And there's the other expenses with legal fees as well, like you know, statement of adjustments where they're going to pay the borrower or the seller for utilities or hydro that's been paid, or condo fees, you know, per diem, that kind of stuff. So there's going to be the legal expense, and then you'll see the extra costs on their sheet as well. So sometimes that can be a surprise to some new homeowners. Moving expenses. I've personally moved like 14 times in the last 10 years, believe it or not. And every time we move, it costs us money. Of course, you guys understand that, but it's crazy to think how much money, not just like the actual moving part, but like, oh, I need a new lawnmower. Oh, I need a new couch. Oh, this house needs this house needs that. So it's just the additional things you might not know. If you're going from a condo to a house, you're going to need like a whole new set of furniture and, you know, yard maintenance tools and kind of stuff. So thinking of that stuff, even though it's not a part of your expenses, you don't want your clients to go into debt after they buy a house. I've been there. It's not fun. And you definitely want to prepare them for some of these expenses so that they don't always go to their max budget, so that they can keep some of their cash for this. Appraisals may or may not be necessary for the lender, but if they are, it's an extra expense for the client to anticipate, and that can range from a few $100s to a few thousand, depending on where the property is, if it's rural or anything like that. Some of you may pay for your appraisals, but I personally don't, so it's definitely an expense that I let my clients know. Property transfer tax, or also learned as land transfer tax in some of the other provinces, varies provincially. So make sure you understand your provincial guidelines and what that looks like. I know even the GTA has different land transfer tax than places that are outside the GTA. So definitely make sure you understand that for your clients before you present this, as well before you speak to a client, even offline for this presentation. So in BC, they may be exempt, and I think I have a slide on it, but it may be a different amount than if you're in Ontario. Ongoing costs, we kind of touched on already, would be things like, you know, roof maintenance and you know, things around the house that you're going to have to pay for, heat and hydro and internet and all that stuff that you may not be paying if you're currently renting. What are assets? So we all know as mortgage brokers that a lot of people tend to leave the assets section of your application blank, because a lot of people, I don't know if they do it on purpose, but maybe they don't understand what an asset is. And of course, yeah, it's obviously recommended. So we do educate our first-time home buyers on what this is. And it's just basically, like you can see in some of these bubbles, a collection of the things that you own and have that make up what your net worth is. So some cash would be things like checking, savings, or gifted funds from a family member, but not literal cash. I've actually had clients who are like, well, I have 50,000 in a safe. Well, we all know that that's very difficult to deposit into a bank and show history of it. So it's not literal cash as an asset. So investments are things like the tax-free savings account, RSPs, that new first-time homebuyers savings account that's coming out, non-registered accounts, all sorts of different types of investments available. And again, if there's a financial planner doing the presentation with you, you would just say, hey, we're going to let the financial planner touch on this after, because that's their expertise. But tell them as much as you know, research them if you don't know individually so that you have a good understanding. Some non-liquid assets are what's considered like vehicles, recreational vehicles. Some people put their household items like as a value, other properties as well. And this is a common misconception. A lot of people are like, well, I have a ton of equity in my house. That's like a liquid asset. Well, no, it's not. And reasons we know it's not is because like right now it's very difficult to sell a house. So it's not like you can sell a house like that, which means liquid. That's why things like tax-free savings accounts, RSPs aren't generally considered liquid, but we'll take usually like a portion of that because you can withdraw your RSPs, you just get penalized, right? So liquid means like quick access. Non-liquid means like I'd have to sell this to get my money's worth. Like they're like, I've got a truck. Well, it's a non-liquid asset, but we can still put it in the application. How can I increase my down payment is always a common question for first-time home buyers. So they can have somebody, immediate family, gift them a portion or their whole down payment, depending on the lender and their programs. And there's also the first-time home buyers incentive where they can receive 5 or 10% towards their down payment. I've got a slide on that specifically, and here it is. So first-time home buyers, the incentive will vary. So I put an asterisk here. If you're in the GTA, GVA, or Victoria, BC, this will change, okay? So make sure you Google the first-time homebuyer incentive for your area and then adjust this slide. But for the rest of Canada, it's generally the same. So basically what this is a government program where it's a shared equity program, meaning they like own a stake in your house. It's not a loan where you owe them monthly or anything like that, but they will get their money back when you there's 3 repayment methods. So you can pay them back whenever you want, and you just have to get an appraisal to confirm the value. You can pay them back in 25 years if you so happen to stay in this house forever, or you have to pay them back when you sell. It would be in your statement of adjustments with your lawyer. And what they do is if they gave you 5% towards your down payment plus your 5, they would have a 5% stake in your home. So when you go to sell, they would get a valuation of your property, and then they would get the increased value of 5%. But they have recently capped it, which I honestly didn't even know about until I made this presentation, and I was like, oh, I didn't realize they changed the program. So it's always great to refresh yourself with these programs before you present in case some questions come up. So I believe they capped it to like 8% or 8,000 or something like that. Again, I'll have to refresh myself, but definitely want to look into it. Some of the requirements is that you have to have a total house income of less than 120,000. And this is what will change if you're in the GT or GVA. I think it goes up to 150. And then the mortgage amount, including your default insurance, cannot be more than 4 times your income. So this usually restricts the max borrowing amount for this program, or doesn't make it worth it for a first-time home buyer if they're trying to reach that max purchase price. This, again, if you're in the bigger cities, changes to 4.5, I believe. First-time home buyer, they have their own definition of what a first-time home buyer is, because this can vary from province to province when we're talking land transfer tax. So you definitely want to familiarize. I'll open up the calculator here, but it'll go through all of that. And this is a great link to send to your clients as well. You're a Canadian citizen or permanent residence, or even have, I believe if they have like a work permit as well, they can, but not non-residents. And you meet the minimum down payment requirements. This one's important because people think because this incentive exists that they don't have to have a down payment, but it's a good reminder to tell them it's just to supplement their down payment. Okay, so there's a few ways for them to, if they're buying a resale home, it's 5%. So if they do 5, then they can get 5, or if they do 10, they'll just get 5. Okay, so now their down payment went from, they put 10, they got 5 from the government, now they have 15% down. And some benefits of that is, you know, lower mortgage amount, lower mortgage payment, lower default insurance. Yeah, that basically is like just lowering all of this and helping first-time home buyers with, you know, their budgets and stuff. So it's a great program. A lot of people have used it, not as much as the government anticipated, but still I've had some clients use it, and it's really helped them. More people who have lots of debt, and then this is where this kicks in, because the TDS is too high for them to reach their max approval limits. So then we can actually lower, like get them approved for more by giving them a bigger down payment. So I've seen that work in the 400K range in where I live, but it'll vary where you live as well. The 10% that they can get towards their down payment is applicable to new construction. So example, like not necessarily like a pre-sale, but a brand new home or a condo, right? So they can put 5 and they'll actually get 10. So now their down payment's 15. This could never exceed 20 because now it's no longer insured, right? So it can go all the way to 19.99, but not 20. Okay, so something to keep in mind. The calculator is going to bring me to a new screen. Placetocallhome.ca. If somebody wants to put that in the chat for me, that would be awesome. Basically, it goes through what is a first-time home buyer, regional details like we talked about on like the GTA, GV, and Victoria, and financial mortgages. So yeah, it'll ask you, are you, so if you say yes, great. I'm going to say no for the purpose of this. Your annual income is 100,000, down payment is 25,000. We're just going to be buying an existing house, and the interest rate is 5.05. Hopefully they're getting a variable rate. So it'll tell us that what they would be eligible to get as the 5% down payment and that max purchase price. So this is just a rough detail, of course, but and the CMHC, like Go Emily hotline, is actually excellent for your questions. So if you ever have a question when you're talking about your clients with this, just be like, you know what, I'll call CMHC and ask. And just ask. Your clients won't mind. It's a fairly new program, and you want to make sure you have it straight before giving them any false advice. Debt to income is really important. We want to educate our first-time home buyers that debt, like a vehicle payment, will have a huge impact on their max purchase price and borrowing power. So here what I did was the exact same applicant. One has many different sources of debt, but very common, as we all know, a new vehicle. That's the first thing first-time home buyers, you know, like when we're young, I did this myself. You get your first job and you go and buy a vehicle. So you end up with this payment before you buy your house. So we want to educate them hopefully before they get to that point, if not about the impact it'll have, and for them to understand about the max purchase price being reduced. Credit card balances, line of credit balances, and student loans that might not be in repayment or are and have a higher payment. And this one basically is the same thing, but they don't have any debt. So you can see that the estimated, I think this was purchase price when I created this, decreases quite significantly when somebody has debt versus that same person not having debt. So again, that's, you know, you're here to help them get those numbers. And like we talked about in one of the first slides, you can also help them with some forward planning. If they're sitting here, but they want to get over 400, well, this is how you do it. Let's, come up with a plan on how you can reduce your debt load or add a cosigner or whatever that may look like, right? A little bit of education for your first-time home buyers about beacon scores and where that comes from, how it gets created for their credit bureau. So of course we know that we're doing a hard pull when we do look at their credit history, and it is mandatory for them to purchase a home. And the reason it is the lender wants to know, is it a good gamble to give this person money before I give them $500K? Are they good with their payment history? Are they good with revolving debt and paying that off? They want to know their story before they go and just hand out a massive loan. So I like to remind people that you are applying for a mortgage. It's not guaranteed. And this is why we do all these steps before the bank or the lender authorizes this loan to you. So some credit, this bubble kind of just is what makes up your credit beacon score. And this is right from Equifax. Your payment history has the largest amount, and that's just showing, that you've been consistent paying your cell phone bill and your credit card bills, and a history of that. So obviously duration of your credit is important as well, which is your credit history. So we don't want people to close old accounts if they don't have to, if they've been good with them, especially because that will help with their score. New credit and just showing how they're utilizing that, if they're exercising their credit, paying it off again. Or are they seeking credit? If there's a bunch of different hits on their credit bureau, that will definitely show like this person might be in trouble. That's usually when we seek credit, right? So new credit it is good because we want to have different trade lines, but we also want to show that we're managing it and not taking on too much new credit at once. Types of credit, we have, those are the trades in your credit bureau. So those are things like your cell phone, your credit cards and line of credits, which are revolving credit trades. And that's basically Equifax and other credit bureau sources love that because it shows that you're in control of paying off your revolving source of debt and you're doing a good job. If you're not, because it's maxed out or high utilization, that's when your score gets impacted. Mortgage payments and car payments, those I believe are like eyes under the credit bureau. I'd have to check, but anyways, those ones, you don't really have as much control, right? You're just making your automatic payments with those. So yes, they do count towards your credit score. And if you do your payments, then that's awesome as well. But they don't usually have as much of an impact as revolving, just simply because it is usually an automatic withdrawal. However, that being said, you do want to have different trades and different types of credit showing on your bureau, as we all know. Not just one credit card, because that becomes hard for us when we're trying to pitch to the lender, right? And used versus available credit. So again, this comes down to utilization. If they've got a small credit card for $1,000, but it's at $900 or over limit, which is worse, then it's that utilization is going to be 80 to 100%. But if they've got like a bigger line of credit and utilization's lower, or they can manage to stay under that 50%, constantly paying it off if possible is even better. But keeping utilization low is what will really help their score as well. So making your payments, keeping utilization low, having different trades, and being consistent with your credit will hopefully in time give you a really awesome beacon score. I've seen in some of the group chats lately that some people have had like perfect 900s, which is awesome. So here's just some tips. Pay your bills, keep the low percentage available. We talk about utilization. Apply for credit only when you need it, of course. Give it time. You want to have those trades in that history. No negative public records such as bankruptcies, consumer proposals, or anything like that we see on the credit bureaus. Try to avoid, and use it or lose it. A lot of people get credit and then they never use it. So they never build a history or a report, which is what Equifax and TransUnion and lenders are looking for, right? So I personally use my credit card for everything. I don't even know the PIN number for my debit card. Like I've had it for years, but we just use it, pay it off, use it, pay it off. We pay it off every week. And my husband does too. We have awesome points and awesome credit because we're utilizing it. So definitely if they're if they've had previous issues managing credit, then you want to have a deeper discussion on this. But if you can coach them early in advance that to use it and pay it off, that's even better. So just quickly, they're going to, what are lenders looking for? We talked a lot about income. We talked about savings and assets, credit, buying within your budget, which a future slide will go through a little bit of TDS and GDS. But also, this is a big one, is the property itself. And that comes back to that pre-approval that we talked about earlier. Even though you pre-approved your clients, your whole deal may fall apart if the property itself is not marketable, meaning, it doesn't have a primary source of heat, or it's in somewhere really rural, or just doesn't meet the lender's guidelines. Like if they have to foreclose on these clients, how are they going to sell this property is essentially what they're looking for. So if you're an experienced lender on the call today, you've probably seen this in the past where it's declined due to property, not your client. Not as common, but it does happen. And yeah, definitely sometimes the appraisal comes back awful or something like that. So your client can do as much as possible, but this factor is still there as well that we want to remind them and the realtor in the room. So this is GDS and TDS. So we just would quickly go through what this means with our first-time home buyers. They're not going to remember it, but it's just them understanding that a percentage of their income can go towards their house, and a percentage of their income can go towards their house and their debt. So this kind of explains, GDS, going your household incomes, that covers your housing costs, which is your principal and interest, your payment, taxes, heat, and your strata payment, likely if you have one, cannot exceed 39%. And TDS is all that same stuff, but it also includes the other debts, like that client's credit card, line of credit, other mortgage payments if you're not doing an offset, that kind of stuff. So that's why the difference in the two numbers, which can be confusing for first-time home buyers, but just a brief overview of this. Don't get too into detail, because that's our job. Not everybody's interested in what GDS and TDS is. So I just kind of say it's a brief overview is that it's a percentage of your income towards your housing costs, percentage of income towards your debt. How do I increase my max purchase price? This is like common question with first-time home buyers, or when you go and you have to deliver the bad news that they're not approved for as much as possible. Always have the max purchase price, like ways for them to increase this before you chat with them, to give them a little more hope if you're about to give them some bad news. But in the presentation, you would just talk about increasing your down payment, which may be, a gift, or adding the first-time home buyers incentive that we talked about, or waiting to increase that down payment, adding a co-signer, mom and dad, or a co-applicant, which would be like a friend or something like that, right? So those are all ways to increase it by adding these beneficial ways to either increase income or increase down payment or whatever it may need that your client's missing. Fixed versus variable rates. I made this on November 11th, so we've actually seen a rate drop in some fixed rates. So with this slides, you can easily adjust these numbers, okay? Variables kind of stay the same. We'll find out soon in December if it goes up, I would think, not down, but we'll see. So feel free to edit these. They're all manually, you have to do it. So find a calculator that you like and change these numbers. But basically, we're at a point now where fixed and variable are very similar, especially for insured mortgages. So it comes back down to the product itself. So fixed rates have a more stable payment. Fixed rates are generally better to lock in at a lower rate, which, was months ago for us now, because now they're locking in at potentially one of the highest points. We don't know where rates are going to go, but they're committing to a very high rate for the next 5 years, let's say. Variable rates can fluctuate, but they do historically have more savings, right? So we've obviously seen a huge upwards trend in the last few months of 2022, but in the past and historically, they average out. So variable rates have lower penalties. So again, this is part of customer conversation for you. If they're single and they're young, they may meet somebody in the future that they're going to move in with and upsize their home. So 5-year fixed may not be the best bet unless they plan to port it. Do they plan on selling? Are they going to have to downsize? Like all these, life events that may make it so that they don't get to that full 5-year fix is definitely what you want to think about, because the variable rate, if they have shorter term plans, may be the best option, so that the penalty is lower as well. And then I already talked about the short and the long-term plans, but yeah, that should be part of your customer conversation. And again, when you're talking to the room, is just making them understand that these can have an impact. Most people just say, I want a 5-year fix, because it's the most common term they've ever heard, especially a first-time home buyer. But it's making them understand that they're going to have so many life changes in the next 5 years as a first-time home buyer, that they should consider different terms, not just strictly the best mortgage rate, right? My first penalty I ever paid when my husband and I decided to buy a house together was like $20,000. So you definitely, my broker never explained that, like, hey, you could get a 3-year fix or a variable, and when you decide to buy a house instead of a condo, you know, you won't have as high a penalties. So you definitely want to educate them on that. And then you hopefully have a repeat customer in the future. Here you'll see my disclaimer. So if you do change this after the presentation today, change the dates. If you decide to change anything else, make sure you always keep a disclaimer, or at least put something, right? We want to show them that this is not a commitment to lend or pre-approval. It's just illustration, illustrative purposes only. So a brief overview of the home buyers plan. The RSP plan, which is called home buyers plan, is the where they can use up to $35,000 of their RSPs tax-free when they go to pull it out, but they do have to pay it back within 15 years. Awesome program, especially around tax time. If they've got the savings, they can like put the $35K in and then pull it right back out and get the income tax savings as well. A good accountant would go through that with you. Or invite an accountant to your presentation, also great. Tax-free first home savings account. It's a mouthful, but that's the new one that came out. And basically, it's like a hybrid tax-free savings account and RSP, where they can put $40,000 away tax-free and pull it out. And it's tax deductible, like an RSP is when they go to do their income taxes at tax time. It's important to know that I'm pretty sure they can only use one or the other when I researched the program. So for them to know that it's not both, which I had originally thought it was. Correct me if I'm wrong in the group chat, but that's my understanding. First-time home buyers grant. So this is in BC. Again, if you're in Ontario, Alberta, this might not even apply to you because Alberta doesn't pay taxes really. So this will vary. So make sure to change this slide as per your area. But you may come across a time where you're helping interprovincially. So understanding interprovincial is good as well. If you have the Canadian Mortgage app, there's a land transfer tax calculator right in there, which is very helpful if you're not familiar with certain areas. So in BC, I'm going to speak for myself and for those who are in the call, the first-time home buyers grant, which is related to property transfer tax, land transfer tax for those who are out of BC, is up to $8,000. So that's when your first-time home buyer buys a resale home for under $500,000, which is getting harder to do in British Columbia. But if they do manage that, or a condo, then that's great. They'll save on the property transfer tax. There's some other limitations. They have to be, Canadian. They have to have lived in BC for 12 months. There's an acreage restriction, so make sure to familiarize yourself with your provincial rules before your presentation to ensure that you have a good understanding as well. And for us, there's a prorated amount from 500 to 525 or 35, where they pay some of it, not all of it. And then when they get to, I think it's 525, they have to pay the full pop. Doesn't really apply to new homes because that's when GST kicks in up to a certain price, then they have to pay both. So again, really beneficial for those who are buying under that 500K mark in British Columbia. First-time home buyer incentive, we already went through that, but you can just kind of touch on it again with them. And then, they can use a combination of these to help them get into their first home. Purchase Plus Improvement. This is, the best program ever, especially for first-time home buyers, or even myself. We just did it on our house last year when we did the whole outside, $89,000 worth of improvements, and rolled it into the mortgage when we bought it. And it was conventional. It was awesome. I love this program. It keeps our first-time buyers and future buyers out of debt because the first thing we do when we buy a home, when we go to renovate it, it goes on like a Home Depot card or our credit cards if we can't afford it, right? So this is a great way to get paid back after those improvements are done. So we kind of discuss it here about how it allows you to roll it into your mortgage. So essentially, the client's going to get you your quotes up front. You're going to submit that with your approval to the lender. So make sure your client understands that you need that before you can even send to the lender. So for them to be organized so it doesn't cause any delays. The lender usually approves it. The insurer usually approves it. And then you have X amount of time. It varies per lender. Mine was 120 days to complete the renovations, kind of like a checklist. You prove it's done, and then they pay you back. So they don't pay you during. It's not during the whole program. It's not like a construction loan where they're giving out draws. It's just like you pay for it or put it on credit or mom and dad or whatever you need to get it done. And then when you prove to the lender you've completed what you said you're going to do, then they give you the money back. Usually the lawyer releases the fund. It's like a hold back at the lawyers. And then they'll be like, well, why don't they give it to me in the beginning when I'm doing the renos? Well, imagine if they said, here's your 40,000, and then you went to Mexico and never did your renos. Well, now your property's not improved at any value, and that money didn't go towards building, equity or extra value in your home. So it's definitely given after the client needs to know and understand that. So here I show an example. If they, this was again November 11th, but if they added $40,000 to their purchase price, so they went from home price $460,000, they needed $40,000 in renos, it only increases their payment by $232. You can imagine when rates drop again in the future, that margin gets way smaller, which is even easier to convince your clients to do this product. But $232 compared to having a line of credit with a balance on it that's going to go nowhere for 10 years is way better. Just roll it in and go from there. Benefits for the new construction. The presentation I did with the realtors last week was for pre-sales. So we had a slide. We didn't even have the purchase plus improvement because it wasn't relevant. We just had new construction. So again, we talk about the property being brand new. Property transfer tax exemption, again, this is in British Columbia. You'll have to check the regulations for your area. But for us in BC, if they're buying a brand new property, they can be exempt the property transfer tax and get the GST rolled into the mortgage, depending on the lender. And then they can also take advantage of the 10% first-time homebuyer incentive if they qualify. Any of these programs, I always try to ask or recommend to the clients that they seek legal advice as well, just simply because, we're not the ones processing these exemptions or the GST or anything like that. So the lawyer actually is the one who registers the charge for the first-time homebuyer incentive and all that. So again, partnering with the lawyer for this presentation would be extremely beneficial for them to go over these points as well and what it looks like for the client at closing. But otherwise, definitely seek advice about your area. Now we're pretty much almost done. We're going to talk about what is a mortgage broker. Some first-time home buyers may not know what a broker is. So essentially we're pitching to them that, we have options outside of just the banks, more products, more lenders, more policies, and more interest rates. So it's not always about rate, but we can obviously shop around for the best one if we can. And we're qualified. I came from the bank. I went broker, bank, broker. So when I went to the bank, I actually let my license lapse because it wasn't required. So a lot of mortgage specialists or bankers are actually not qualified to do mortgages. They just get their internal training to do mortgages, where a lot of the times it's where we see mistakes, right? So, and then they come to us, and my bank made me a promise and they didn't follow through. They're not like us in the sense where we just do mortgages, right? We're crushing mortgages day in, day out. So you definitely want to make that point obvious that your job is to do mortgages. We don't do savings accounts and tax-free savings accounts and all this stuff. Like, you are a mortgage professional. So that's the difference too. You went to school, you have a certificate, and you have the proper training to execute the job properly. And it's free to work with us. You know, the majority of first-time home buyers are not really going into private mortgages, but generally, you know, we get paid by the bank, so we need to make that obvious as well. The newer generation is aware that brokers don't charge money, but some older generations still think that we're like only B lenders and that we charge fees. So banker versus broker. So the banker has access to one lender, one set of program policies and interest rates. They can't go outside that bank. And whereas a mortgage broker, we have access, depending on our brokerage, to many lenders, many programs, policies, interest rates to help you find the right solution for your client. Our featured lenders, again, you can just simply delete this and add your lenders that you, oh, what did I do here? Yeah, and then add your lenders that you have access to. But so definitely look at this slide before actually presenting. If you don't have, these are just some of the lenders we had access to, but you may want to add more or add less depending on your brokerage and your accessibility. So I do remind you there. So just explaining again to your first-time home buyers that like, hey, I have access to all of these and more to find you the best rate, the best product, including some of the banks, you know, Manulife, TD, Merrick's. So it's not to say that you don't work with banks if it's the best option, but you can explain, you know, banks have higher penalties, but sometimes they have better programs. You can go into more depth if you'd like. If you have the Canadian Mortgage app, definitely show it off here. You can change your presentation. You likely won't be sharing links, but if you ever do share a PDF, you can simply add a link here and then it will go. But same thing with these. You can easily add links in Canva like that and show it off there because the mortgage app is amazing. I definitely recommend it if you don't have it. If you're part of certain companies like Dominion Lending, Mortgage Architect, and those ones, you likely have your own branded version of this with that company. So definitely pass that out. It's a great way to get leads, get the first-time home buyers to use it. So basically when we were done this presentation, we got to this slide, we said like, okay, we just gave you a massive overload of information and we don't expect you to remember any of it. So download my app so that you can do it yourself, because then there's that pre-qualification tool that they can do in like a minute. And there's the land transfer tax calculations, purchases, closing costs, there's all sorts of things, right? So you can just basically say, forget about everything I just said and download my app and you can easily do it yourself. And then you definitely, if you have one or your brokerage has one, you want to add a 5-star Google review that relates to a first-time home buyer. So you'll either go to your Google or your Facebook, wherever you're collecting reviews, and you'll find something that relates. So a first-time home buyer, hopefully, that left a review, or a parent that co-signed that was happy with the process. Definitely something relatable. You don't want to put like a refinance here because it's just not relevant to what you're currently talking about. Or again, if you don't have one because you're new, you'll get there, just delete the slide. Drag and drop your photo into the applications. And then you definitely want to I put my photo in here because there you go. You definitely want to put your information at the end of the presentation so that these people know how to get a hold of you. But for those of you who know me from previous presentations, you're also going to want to get pamphlets made. So not only are you going to present, you're going to leave a really big, bulky pamphlet for your first-time home buyers to pick up instead of a business card, because it's just easier for them to remember to grab and possibly not throw out, which is what happens with business cards, right? I have one specifically related to first-time buyers. I haven't released yet, but I will. And basically, I put my app in there and just a little bit about the process and contact details and stuff like that. So you definitely want to share your contact details so that the members know how to get a hold of you. And then you're going to thank them for their attention and see if they have any questions. Or if you're doing questions at the end, definitely you can just get rid of this. And then maybe you're going to be introducing the next member. So in our case, we were introducing the lawyer. So you can add a slide if you want to do like an introduction slide, or just do it off memory or whatever works best for you, right? So now that we're done the presentation, before we get to questions, I just wanted to kind of tell you like what we do and how we find people to partner with. So essentially, when I first started, I started researching realtors in my area and spamming them with what, you guys get all my spam now too, right? So I used to spam them with, purchase report, open house sheets, let's go for coffee. But my biggest thing here is that when you're meeting them for coffee, I do really like when you do presentations for realtors. But to me, what I've learned and what works for me is that I meet them and I say, hey, I've got this awesome first-time homebuyers presentation. Let's collaborate and do a webinar, a seminar, or whatever that might look like. So instead of like showing up to their office and doing a pitch, which is important, but can be rather boring because every other broker might be doing a similar pitch, you want to be like, here's my value. Let's combine our efforts and, put some Google ads and Facebook ads out and, get, a local community to come together. Let's find a realtor, a lawyer, an accountant, and a financial planner, and do this awesome first-time home buyers where people might actually want to show up, right? So partnering with a realtor versus presenting to a realtor, in my opinion, has a way better long-term benefit. So when I first started, I used to research a bunch and then I picked a day and I'd go visit as many as possible. That way your pitch gets better. And then you follow up the next day and a few weeks later. And as simple as like, I wouldn't write along an elaborate email of like who I am and what I do and what I could offer. It's simply like, hey, Joe, I popped by the other day, didn't get a chance to meet you. I was hoping we can go for coffee, or, I've got this first-time homebuyer presentation I'm looking for a realtor to partner with. Hopefully you just land a coffee meeting and then you go from there. And if that doesn't work, you do it all over again. And the cycle repeats itself until you find your partners that you like to work with. And here I am, 6 years later. The first-time homebuyer presentation we did last week, they actually approached us to do. So when you get to a certain point, your realtors trust you, you've provided value over the last couple months or years, they start coming to you and wanting you to work with them. So before we jump into the BRX kind of presentation for those of you who may be interested in joining the brokerage, I'm just going to go to questions, and if you want to stay on the call, we'll go through the BRX stuff after. But essentially, you can reach out to me if you're going to hop off the call to my Broker Pro email here. I put it at the very beginning of the chat as well if you want to scroll up. And again, it's only available currently for BC, Alberta, and Ontario agents. So basically, you would get all the marketing information that I provide for free. So I'm going to stop presenting my screen. And thank you for all those who stayed on the call. That's awesome. Does anybody want to go first with questions? Isaac?
Hey, Sarah. Just wondering, this day and age, how did you find popping into realtor offices? Were many like hanging out in the office? Like, it seems like a lot of them are not in the office right now, but what did you find your experience was like?
Well, I started about 6 years ago, so it's prior to the pandemic, right? It was 6 years, and then I did a stint as a licensed assistant. So really, let's just say 5 years ago when I started my own book of business. But I popped by a lot of different professions. Realtors are in and out of the office a lot, and that's where the follow-up really, comes through. Scott says that fortune's in the follow-up, and it really is. It's like, hey, I actually popped by, you weren't there, and then you send an email or a text, right? So you do get lucky. I mean, my husband works out of the real estate office that we've partnered with, and the majority of the realtors go every day. So there's a group of them that don't. There are about 40 realtors, but those who are higher volume producers or getting started and very keen, they're showing up every day. They're working their normal hours. So you might get lucky and do that, but you'll walk into the office, there'll probably be a stack of cards with all their agents. Grab all the cards, see if anybody's there to talk to you, and then you get to your computer the next day and do some following up. Add them to your email list as well, right?
Yeah, and I'm assuming you were dropping a pamphlet. What type of pamphlet were you dropping? Just like a general value add, here's our business and here's what we provide?
Yeah, when I first started, I didn't do the pamphlet thing, right? And that's something I learned as time went on. But the Realtors of First-Time Homebuyers pamphlet would be beneficial. You always want to bring something that benefits the client, not the realtor. You want something they're actually going to keep in their little folder and they're going to give out. So you're always wanting to help them, and then eventually the relationship is formed. But in this case, my pitch to them would be like, I've got this presentation and let's do it together, right? But yeah, if you don't speak to anybody, definitely I recommend a pamphlet.
Awesome, thanks.
Mm-hmm. Anybody else for questions?
I'll go quickly. I know you were doing this presentation and kind of chiming in why you were saying it, saying what you were saying for our benefit as like learning how to do the presentation. But if you were just presenting it, how long would your spiel go for? Because I'm just trying to think, if you got a lawyer, an accountant, like is this like a 3-hour thing, or is this like you do 20 minutes, the lawyer 20, like something like you can jam into an hour?
Exactly, Mike. Yeah. So our portion of this presentation itself, which was pretty much the exact presentation minus that plus slide, but we added the new slide, the new construction slide, took 20 minutes.
Okay.
Both times we presented it.
Wonderful. Thank you.
Yeah. And then the realtors were very brief about their presentation, which they have been with both times. So I do have in like my queue of things to do. I want to create presentations for them, kind of like a bundle package that you can add to this one so that you can be like, hey, I have slides that are done for you. Where that maybe they're talking about property transfer tax instead because it's relevant to both fields, right? So breaking it up a little bit more, because I do have the full presentation from the Realtors, us, lawyers, and financial planner from last week. So I kind of plan to convert it so that you can approach all of the industries and be like, hey, I've got this like master spreadsheet that we can use. So definitely recommended. And we're hoping to do it virtually next time. So I'll share the results when we do it on how long that takes. But I would imagine the timing would be very similar.
Thank you.
No problem. Anybody else?
Hi, Sarah.
Hey, Sarah.
Oh, a little bit Nita first. She beat you to it.
Yeah, just wondered, do you always do the presentation live, or would you ever consider like recording it on Loom and just sending it to them, or is that not really worthwhile?
To be honest, I know a lot of you have been doing like recordings and stuff. It's not something I've actually like explored yet. So I'm interested to learn how that's worked for you guys. I know a lot of people in Realtors do their videos and they record them and send them out as like part of their email campaigns. But I'll be honest, I haven't done that yet. So for this, no, I haven't. But we've done all these presentations to date in person. But after the last event, the first-time homebuyers one, we didn't have as big as a turnout because originally it was sold out, and then about half the people didn't show because we had a snowstorm like in our area, which isn't common. So most people stayed home. It was still a great turnout, and the people who did show up because it was smaller were very engaged. However, when I went to the office the next day, I kind of approached the realtor and I said, hey, due to this demographic being much younger to the previous presentation we did, which was a downsizing seminar, I was like, I really do think we should look at a platform where we can do like a combined meeting again and market to a bigger audience as well, right? So we haven't done a virtual one yet, so I'll let you know how it goes. But I think for first-time home buyers, that may be the ticket, because then you can run your Facebook ads, TikTok ads, or whatever you're going to do and host it. And even if it's Facebook Live, perfect. There's no cap there to how many people could go. You may have a bigger audience just being first-time home buyers, right? They probably prefer to sit on their couch and listen to this kind of stuff. So I'll let you know how it goes. But to date, it's all been in person.
Okay, great. Thanks.
No problem. Tony?
Hey, Sarah. Great stuff, by the way. I just
Thank
wanted
you.
to know, other than your partners, how are you marketing your webinars and seminars?
Well, because my partners, like I said, have approached us to do these, because I've been working with them for years now. So how I gained, I'll start backstory on how I accessed these guys. I spammed them. I constantly showed up to their open houses. He's the managing broker of this real estate firm, is really heavy on pre-sales. I showed up to all his pre-sales, and I just constantly showed up. And like you mentioned me, I always have pamphlets. I would give rate sheets, my pens, all whatever I could bring. I had like a big folder. Be like, hey, his name's Brendan. Hey, Brendan, I'm Sarah. We've never met, but here's all this stuff you can put on your table while you're doing this like open house, or his pre-sale events, which were like, he had like coffee and stuff out too. So with time, him and his partner were like, who should we approach to work in our office? They actually approached us because, and like I said, it's value added, value added, value added. I constantly provided value without him having to ask. Never asked him when he needed something. I just did it. And I figured if he didn't need it, he just wouldn't put it out, right? And I do the same thing with his agents now. So in this case, he approached me to do the first time homebuyer seminar, and knowing my background, I created the presentation and did everything to his liking, and he marketed the webinar for us. So the webinar was actually, because it was pre-sale construction, was for a big unit going in Kamloops, which is called City Gardens, and they paid for all the advertisement. So I got very lucky in that sense. But otherwise, they use like Facebook, Instagram, just the basics, ads.
Right. Okay. No, that's awesome. Thank you.
Mm-hmm. So I do encourage, like that's why partnerships are so much better than landing like one first-time home buyer, right? Because eventually it's going to be, something long-term that you're going to get lots of deals out of. Like the pre-sale one that we did with them, like we can't do pre-sales in the broker community, but I still do it to keep my managing broker happy, like the realtor. And he personally sends me deals. And because he's been doing this a long time, they're big deals, like in my area, they're all $1 million, $2 million plus. And so to me, that's like, he's paid me for my time for this kind of stuff, even if it doesn't benefit me directly. So any other questions? I'll go through the chat just to see what everyone's saying. Gotta run. What are you using for tickets? Eventbrite, also getting people in seats and not having the event sold out, then empty seats. They used Eventbrite for this one. And what they did is they only wanted 20 because they called it like a boutique presentation, and they allowed 25 to register. So they for them, they provided like dinner and snacks and all sorts of stuff. It was in the pre-construction like showroom. So it was a small area that we had access to for the presentation. The previous one, they used the same Eventbrite, and they allowed 50 people, and I think 45 showed up. So they definitely used Eventbrite. And then we're going to be brainstorming about this future virtual presentation as well, because I told them we can just use Google Meet, but they want to look into something else. So Google Meet doesn't have a great registration anyway, so we probably will have to find another platform. A question in here was, do you recommend signing up for the Broker Pro Canadian Mortgage app? Then yes, I do. It's I can't remember the price exactly, because I pay for like a premium package where like this realtor that I'm talking about actually has his own app of the Canadian Mortgage app. So it's branded towards his real estate firm's called BSRE, and it's like all blue and his picture and his logo for his team. So I gave it out to his team to use to hand out like as a lead collection, but behind the scenes, the Canadian Mortgage app sends me the leads. I've obviously made them aware of that, and they have no problem with it, the realtors, because they use this already. But we do the same thing. We pay for calculators on their website and all sorts of stuff. So Canadian Mortgage app has a few different products that you can do for yourself individually and for your referral partners, depending on how in depth you want to go. But you look in to see if your company has it before you sign up as well. Because if you're with some of the bigger companies like DLC and Mortgage Architect, Mortgage Alliance, then you'll have access to their own branded version, which is essentially the same as Canadian Mortgage app. Kelly, She said, yes, yet it's game changing. Oh, she must be referring to the app. Yeah, it is. I love the app for marketing and obviously for my clients as well. What do you use to manage your follow-up reminder emails and newsletters? I'm actually in the process of changing that right now. So I may not be able to give you a massive great advice here, but my original website was built on Wix. And due to the recent changes Canadian Mortgage app did for their web calculators that they just released about a month ago, I actually have a developer redesigning our entire website. So I'm going to be changing our website from Wix to WordPress, and then I'll probably be looking into a different system. So currently Wix, if you have an account or a website with them, it's very basic because it's very user friendly. It doesn't really give you the customization that you may need for a mortgage platform, such as adding those type of custom calculators. But if you're just starting out, like when we started our company, it was great. It was easy. We were up and running in no time. And they have what's called Ascend. It's a added package, and you can do your emails, newsletters, blogs, everything from there. I use Wix currently for both companies, my Broker Pro and the mortgage one. It works really well for the marketing company because I don't need as much custom details on our website, but it doesn't really work well, if I'm being honest, for the mortgage industry if you really want to connect some other features like a calculator or adding rates to your website, that kind of stuff, right? So that's all custom coding that's required that we don't have. So I'll be looking into like MailChimp and that kind of stuff. I put out a post recently to our group and just said, like, what are you guys using? Do you like it? So some people were using like Blue Mortgage, all sorts of stuff. So I'm definitely going to be looking into that. My website's probably still a few weeks out from development. So I'll let you guys know. Any other questions? And then what I'll do for those of you who are still on the call, I'll just quickly go through the BRX stuff. And if you want, you can just simply send me an email, and we have like a training / onboarding specialist that can take your call. I'd love to join the call as well. So many of the new agents, I do take the time just to kind of hop on in case there's any additional questions about marketing. You're welcome, Glenn. And that way, you know, you leave with an informed decision. So to give you some background for those that are still listening is, I've been looking for a brokerage for about a year now. We always anticipated, my husband and I, a change in September of 2022. And the reason for that being is because I went broker, banker, broker, I was waiting for my designated individual status so that I could either open my own brokerage or incorporate our company, which is required in British Columbia. So we knew that the September deadline was going to be kind of our goal to make these massive changes. As you know, changing brokerages is not fun, and it takes some patience. And obviously, if you've got a book of business already, it takes some forward planning. So last year, I started interviewing some companies, some bigger ones like Verico, if I was going to do my own thing, because I always wanted to bring this type of training and marketing to my clients as well and my brokers. And that's kind of the only way I thought I could do it, is if I started my own thing, which I have a young family. And for those of you who have young kids, you might know that that's not super doable. So it was kind of put on the back burner for a bit. And then in early summer, I did my first presentation with some of you and about pipeline, how to grow your pipeline. And a company actually approached me, hey, we want you to train, we want access to your marketing material and all this stuff. And that's what kind of put the bug back in my ear to get moving again. So I started interviewing, probably interviewed close to 30 brokerages, I kid you not. And I obviously was interviewing a different capacity. I've since moved my book of business over to my husband. We're lucky enough to share a same household income. And I get to do what I love now as well, because that part of the business I've taken over, like this marketing, business development and coaching, and I much prefer it than underwriting and doing the mortgages. So I was interviewing and trying to find a brokerage that had excellent training for the new hires that were coming on to us, which were important. We have some people joining us from the banking world who are not familiar with the broker industry and the different financial lenders that we have access to, programs, policy. You can imagine how overwhelming that would be, as I'm sure if you're new, it was as well. So I needed somebody to help with that transition. I also wanted somebody to help our newer hires because if you're new and you're part of a brokerage right now, you've probably realized that you've been made a lot of promises and not a lot of them have been followed through. So what happens with the managing broker is they recruit you to come to their team, and then they have their own book of business, so they don't typically have time to help you with your files, because you can imagine if you're making 95% on your own deals and only 20% on your broker's deals, you're going to prioritize your own book of business beforehand, right? So I definitely quizzed them in a different way. How are you going to treat my new agents? What kind of programs do you have? What kind of training do you have? If they already had marketing, which surprisingly not a lot of people did, just kind of went from there. I was surprised to hear some people even told me they had no training programs, but they still did like a really aggressive split with their rookies. So it was very eye-opening to me. And in the past few months, through my training, I've met hundreds of brokers that have just not been happy with their brokerages, and for those very same reasons, right? The lack of transparency, and they reeled them in and didn't deliver on those promises. So I was trying to find somewhere I could land on and not leave for a while, but that could support and supplement the things I was doing. I wanted to do this: coaching, marketing, business development, how to help you grow your business. But I need somebody to help with the training. My husband and I are there to answer questions, but I'm not going to be naive in saying that we're not busy as well. So we want to make sure our brokers are taken care of, as well as have access to us. And then somebody told me about BRX. They weren't even a part of BRX. And they still aren't. They decided to go to another brokerage. But I was surprised to hear from them. I had never heard of this company. So I started doing my research. I did my discovery call. I'm very analytical, and it takes me a long time to make a decision. So Scott, who's the owner of the company, and I started talking months ago, and it took me a long time to actually commit to moving over to BRX. And then once I did, finally, Dominion Lending tried to retain our business and our brokerage so that we could stay. So they held me to my 6-week commitment, which was like when I gave my notice, in my contract, it said I would give a 6 weeks notice, and they held me to the very last day. They introduced me to many more brokerages in that 6 months to try to get me to stay. I did meet a couple that I really did like, but not enough to make me stay. And so I finally did make the jump. I think my license just went through, like the transfer, like last week, and the process didn't take long at all. Like in BC, like less than a week, I would think it took 4 days or something like that. And I heard the onboarding specialist said in Ontario, it's like almost instant. In Alberta, it depends on if you're new or not or whatever. So give or take a week or two. So I was really surprised with that. My husband hopefully will be transferring in like the new year if he kind of makes that commitment as well. And some of our agents have already started onboarding. So we're obviously very excited. So Scott and I'll share my screen. Scott and I decided to pair up so that I could offer pretty much everything that I offer with the marketing company, but to the BRX agents for free. Because much like him, it's important to me that people succeed. And when you're new, you tend to not have access to these resources or have the time to do it, or maybe even the skills to create like a really nice, appealing presentation to help you get those leads and those referrals. I had to do it all myself. I'm sure Scott did as well. And it was tough. It was, the learning curve to becoming a broker is really steep. So my goal, and I feel like I'm very aligned with Scott, is his goal as well, is to help as much as possible to get you there quicker, or at least make the process a little bit more enjoyable and less scary. So we teamed up and are offering pretty much all the services. So one of them is the Canva template. So you get 9 Canva templates per week. And like, so for an example of this is all the designs. So you would just simply click, and it's all branded towards BRX. And if you're familiar with Canva, you can rebrand it to your own brand and then just keep the BRX logo to stay compliant. And if you're in Ontario, you'll want your FSRA number. And then in the notes section, there's everything you need to say about this post. So you simply actually have to copy and paste it. And then we recommend changing your contact details here. You can obviously change this to your liking. And the reason we give you 9 per week is like, maybe you're like, hey, this post is awful. I hate this post. And you decide you don't want to do it. Well, then you should still have plenty more. Some people like to post 3 days a week. Some people like to post 2 times a day. So we've got some mortgage related content. We've got what's like called fluff content. You know, what's your favorite coffee shop? Payment comparisons. You know, this was common after the rate increase for Bank of Canada, just showing the difference in payment. And you can see here we broke down what that looked like for a 500K insured mortgage. I put the disclosures here so that hopefully you don't get in trouble. And yeah, just quickly editing, dragging and dropping your photo into here. You can easily, if you're, like I said, if you're familiar with Canva, you can easily change the colors to your template just with like one click. So I like this. And then for me, I would change this, put my Mortgage Tech logo, BRX somewhere else, and write at mortgagetech.ca is my mortgage company. So it's super easy to use, super easy to change. That's why Canva Pro is the best. So yeah, we do that. This was a bonus this week. Instead of 9, we did 10 posts, and we provided everybody with that cheat sheet, which is awesome. This post got the most engagement out of all my posts that month, and was shared quite often by realtors. And then what I recommend for all the Bricks agents as well is to rebrand this to your referral partners. So for example, I have that mortgage group or realty group that we work with. You simply go like this, and we'd want to change this background, you know, to possibly dark, and then put their logo, drag and drop their agent's photo in it, and then put powered by Mortgage Tech or Bricks or whatever, and ask them to share it. Now all of a sudden people are marketing you, and I'm here to tell you the real estate agents do love this piece of marketing material. I've had many agents use it, and then without me even asking, they sometimes in the post even put like a shout out. So I use this for my post, and for them, they just say, here's an awesome cheat sheet. Thanks to Sarah Mathieu from Mortgage Tech. So very, very awesome material. Everything I give to you guys, I recommend you translate and change the colors and give to your referral partners as well. All the presentations, so that's today's presentation, all the Bricks agents receive for free. And it's, again, rebranded towards Bricks. So you just go in, change the colors, or don't change the colors because it's all ready for you, and drag and drop your photos. So we have currently 6 different ones that are you'll have access to soon. We just have to finish the rebranding. And then things like the brochures, the here's all the different things, business cards, realtor bundles. The realtor bundle is my Realtor Pro. It's more for featured listings. And again, to partner with your real estate agents, it's like, hey, I have this awesome marketing team that can help us and create you some featured listings. And all this is clickable. It's a free website they can use, and they could advertise on their social media pages and stuff. And then this is your section, you know, financing estimates, get connected with a broker, I believe goes to, yeah, my husband's email. Pre-approved goes to like our app, and the apply now goes to our FINMO. Again, I told you I branded him to his own app. So you can see there he has his own Canadian mortgage app because he's my top referral partner, and I branded this to him. But if they don't have their own referral app, then I'd brand it to yourself, which is free advertising for you as they share it, or just put even the free version of the Canadian mortgage app. Book a tour and their contact info. So this is just the demo for them. But we do offer this to their agents. We've had my Realtor Pro This is the one I show Alicia. She, put all over her Facebook, Instagram, and thanked me a gazillion times for this. And again, I did this without her asking. So one day I just messaged Alicia and I was like, hey, here's all this stuff for you. And because it's value added, she posted it all right away. So she loved it. That's the kind of part of the realtor bundle, but it has like door hangers, postcards, all sorts of other stuff. Again, you're going to your realtors and saying, I have all this stuff. I've got like this marketing guru, which is, me. You don't have to tell them that I work for BRX. You just say that I work with you, and that we're here to help them succeed as much as you, right? The brochures, and then of course the training. Eventually we will be doing BRX specific training as well. I'll always do free training for everybody because that's important too, but we'll have some additional stuff. Everybody's getting a free email signature. I've got different templates for this that I can give, but that's the owner, Scott Peckford, and his new signature. Free 30-day trial with Canva Pro. I wish I could give it forever, but it's still cheap. It's like $17 a month. And then for the agents to connect with me. So obviously if the agents need something new, like one recommended a new to Canada presentation that they wanted to do, then of course reach out to me with your ideas, because that's what I'm here to do. It benefits me, it benefits you. So I'm kind of all ears when it comes to that. So that's kind of what we're doing with bricks, and it's going to evolve with time. And again, so with BRX, you do pay $150 monthly fee. And much like you do with Mortgage Alliance, or when I was at DLC, everybody's got their own name for a desk fee, tech fee, ad fee, whatever it is. But this is all part of that. So Scott's incorporated all of this awesome stuff into it so that I can offer it to you guys for free as well. So as new presentations come out and new training and new material, or again, custom material, then we'll definitely roll it out to the team. BRX has some other awesome stuff like free training. They have a commitment fee, of course. It's going from $1,500 to $3,000 December 1st. That sounds steep, I know it does, but you get it back after you've completed 10 deals. During that time, you get like unlimited underwriting support, different types of coaches. There's some people here on that call, maybe they could chime in after, but there's like a submission coach, a credit coach, and a lead coach. There's mindset coaching. There's like literally every single kind of coach you can think of. They just hired a tech coach to help with technology. So it's like you log into a room like this and you just chat with somebody right away, share your screen and learn. My banker just logged into his the other day, and I could show you the email if I could find it easily. He messaged me after and he was like, Sarah, that was so awesome. Thank you so much. The process was so simple. And so I was really happy to hear that, because obviously I'm not a rookie, so I won't get to experience the program myself, but from the agents who have completed it and those who are in it right now that I know, I love it and the support. In addition to that, they have like capped commissions, which is, 85-15. And then when you reach 100K gross commission income, depending on your area, that could be like, between 10 and 15 deals or more. And then you go to 100% commission, which is unheard of in our industry because BRX doesn't have what's called a royalty fee. So royalty fees, even when, a place like Dominion says that it's 100% split, or you're going to get 100%, or whatever, whoever they might say that, there's always a royalty. So you get 100% after the royalty is paid. So BRX does not have that because they're their own company and entity. So that's also amazing. So you take home what you earn after you reach a certain amount. Then there's a file fee after that, but just to help them pay for payroll and compliance, which is done for you. And there is a revenue share program as well, which is also a way that helps me get paid for the agents who join my team specifically. I give them access to some other materials, but also mostly coaching. We'll just do, once a week and make sure they're on track to do the things that they want and the goals, and some additional coaching like we did today on, how to find these leads. And I keep them accountable. So so there's lots of benefits. If you're interested in learning more, just message me, text me, whatever you want, whatever's the easiest. Oh, Kelly says AB is super duper easy to move your brokerage. From what I've heard, it is too. I've heard Ontario is super quick too. It's like an instant transfer or something like that. So, of course, if you're brand new, then you have to go through like your provincial regulating board to get set up. So the banker who just joined my team, his took a little bit longer because he had to get approved by BCFSA and all that stuff. So definitely a bit of a different transition. But we still have lots of tools to help you get started prior to that, right? Like you can get started on your marketing material. And then BRX also has like a 100-day challenge. They've got all sorts of training you can join. So just because you might not have your license yet, if you join the brokerage, you can still get started. You just can't like process any mortgages yet. And if you're existing broker or even a high volume producer, like my husband took over my book of business and he does about 35 million now. I've talked to some agents recently who do like 70 million on their own, which is crazy without an assistant. But for people like that, the capped commission is very, very appealing, right? Low fees, capped commission is very, very similar to an EXP model for a franchise, which is new to our industry. And I think will gain some momentum, much like EXP did. People are gravitating towards BRX like crazy right now. I just saw that they hired a new underwriter that I knew from my previous company. So it's exciting to see that people are hearing about BRX through different types of channels right now. And yeah, and then in addition to that, all the free marketing support. So if you have any questions, again, yeah, just reach out. So on that note, does anybody have questions that's still on the call? Okay, 3, 2, 1. Okay, I'm gonna hang up and let you guys get back to your day, but thank you so much for hopping on, and we will stay in touch.